So this is the whole move, right? It's from 200 and probably 17 or 18 to 479.
Exactly.
If this is the bull move, right? There is a
Yes.
possibility that, let's talk about just the possibilities. It could come to 350 or 317.
Okay.
This is nothing. So if you buy even 10% right here and another 10%, you know, a little bit lower. If this comes all the way here, you will lose a lot of your capital, and it takes a while for you to recuperate all of those. So what I'm saying is, it's for people who, okay, people who do passive investing. For them, that's really amazing. They never take the money out. They just add, you know, every time there is a 10% down, you know, every time there's a 5% down, they just add it to the index. Okay. But we are spending a lot of time figuring out how the market is moving. Okay. If we can figure out, first thing, I am not a big investor in indices or, you know, ETFs, because I want to do much better than the index. For that, I need money. So I did keep SPY around here because I did not find a lot of good investments at that time. So again, coming back to how low it could go, it could come all the way to 317. And that wouldn't be a, you know, far-fetched expectation. Believe me, it's not. So if it comes all the way, see, people cannot perceive, actually nobody can perceive where the market is going. But every time you get a very big correction, everybody is surprised. If we look at all the stocks, so let's look at Apple, for instance. So Apple went from 53 to, so that's a triple, right? If you want to talk, you know, unmute yourself. I'm getting some
See,
noise.
but KP, all these stocks, right? The underlying business model did not change. So they'll continue to do the business the same way. They're gonna have the same customers. So I think it's just a reaction to this interest rates, but there's no other factor in the market, right? The business model did not change. The targets did not change. Their earnings did not change. So it's just a reaction to the interest rates.
Okay, there was a lot of, I mean, that's all fundamentals. But the thing is, that's not enough for us to figure out how far it is going to go. I mean, I have been through the 2008 correction. Okay, it was brutal. It was horrible. Okay, and I mean, when I lost most of my investment, I mean, I just started in 2006. So 2008, I was like a 1-year baby in the market. Okay, I had no clue what I was doing. But when the stock started going down, they were going down 10%, 8% every day for months. Okay, and nobody knows how low it could go. The only reason I would say all this has happened, even in Apple, is because of the free money that's being pushed into the market. Okay, right now they're cutting it off, and they're increasing the interest rates. It means the amount of credit is going to go down. Again, you know, those are all, you know, fundamentals, which again, you know, we can read a lot about it, but that's not gonna help us figure out where to get in and where to get out. Okay, and talking about corrections, so Apple moved from 53 to 180, and how much did it move down? $20. So it went up $130 and it corrected $20. That's not even a correction. So talking about it, it could come all the way down to 120. That would be a 50% move lower. If this comes here, your SPY and QQQ, they're going to come down a lot. So, I mean, when you buy SPY or QQQ, you know, for every 10% move lower, what happens is, with that thought process, you will never have a stop limit. If you don't have it, believe me, things could get worse. And when your SPY is going down, when your portfolio is going down, you're not paying attention to what the next leaders are. The only thing you're worried about is that your portfolio is going down. You're not looking for, I mean, I've been through this for many years and I know how it feels. When you have a bunch of stocks that are going down, you're not looking at the stocks that are going up at all. So not only you're not making money on the stocks that are going up, you're losing money on the losers. So
no, I that's the extreme. I think we discussed this last year also, like February. I think there is a lot of froth in the the so-called growth companies. They start with $10 million and they make like $20 million in next one quarter. They are 100% growth and their stock went up 1000%. I think a lot of those companies caused a lot of froth, right? See, Apple will earn $100 billion. How many companies even earn 100 billion? Forget profit, sales. I doubt Apple will go to 120. If that happens, probably I think we'll all will be out of business.
That's what I'm saying. If that happens, that should be an amazing opportunity for us. So
no. If that happens, I think half the people in country will be losing jobs. That's a very extreme, very like a depressive kind of. I doubt it.
Arvind,
I mean, I don't know. Yeah.
Arvind, we have.
No, we are just debating. Yeah.
No. We are supposed to be prepared with
the
worst possible situation, right? You shouldn't be losing money because we have an opinion about how or where the market is going. The easiest thing to do is follow the market, and when there is an uptrend, be in it. When there is a downtrend, don't be in it. If you can, be short in it. Okay, and then that will make you a lot of money, right? The whole point of we trading so much and spending so much money, so much time, is to make money, right? So why do we want and expecting that Apple cannot go down? Apple has gone down more than 30%, like 3 instances, I think, so far. More than 33%. So we cannot expect that it's not going to go down. So 180, 33 is what?
I can tell that there's no, but one thing I can tell is, there is no positive talk about the market anywhere right now, even on YouTube or CNBC and all. Nobody's saying this is just temporary or something, right? I mean, the one thing I noticed this time is, there's no positive talk. They're saying, it can only be worse.
Because there is a lot of froth, right? See, companies which have a zero profit.
Let's just talk numbers, okay? Let's not have a general conversation, okay? If you are seeing a setup, let's talk about setups. Everything else, it's just a conversation. That's not going to help us figure out what to do next. Let's figure out what to do next. That's it.
Yeah, KP, can we look at once we're done with Apple, right? Can we look at RBLX and Tesla?
This is going to take a while for it to more turn around. See, whenever we have so much of, it is in a downtrend. First thing it is, unless it turns around and makes a higher low and a higher high, this is a no touch. What's the other one? Tesla.
Tesla.
Yeah, this one is actually holding well. Well, I mean, most of the EV companies, they are holding well when compared to the rest of the market. So looks like, I mean, they will have a bull market for probably under 5 years or so, but that does not mean there won't be any correction. But I mean, so far it broke out and still above that level. So as long as it stays above 900, it's still is good. But the entire move, that's what, $300, $350. That's a big move. So unless we get a turnaround and then probably a breakout, I would still probably wait for it. And again, what happens is when this downtrend is over, all of these stocks will start to move together. We will see that. Everything will start to set up, everything will start to break out. Then, I mean, at that time, we will have to pick and choose which one to get in. Right now, there are not a lot to even pick from. I mean, over the weekend, I came up with, I spent a lot of time trying to figure out where should I be next. And let me show you.
We can just look at the ARKK to figure out all these stocks, right?
No, I mean, I'm trying to figure out which stocks you can get into now. And there were only a few that I was able to. So I did a screen and so those are the stocks I came up with. These, I mean, I actually picked each one of them. So this is a REIT, okay, I won't care. And this next second one is, the only reason I bought this one is because it's staying really well right here. I mean, it's not budging at all. If the market turns around in the next 1 or 2 weeks, this is going to double or triple. This is very strong. And look at the, I don't know, I mean, these numbers are unbelievable. Look at the PE, it's 2. It's 2. Next year, they're going to earn $37 and it's going to go down to 24. Even for 24, how much is that? It's less than 3, the PE. So it's very cheap right now. I think that's one of the reasons why institutions are just piling it on, but very slowly. Look at that, 29 to 111 institutions in 4 quarters. So
any leads you suggest, KP, on this?
say that again.
Leads, because I think I saw I had this, and late Friday I closed for almost break even actually.
Well, again, we are not in a market where we buy something and it's going to work right away. And the only reason I could think that it is having such a hard time trying, not moving higher is because of how the market is. So,
KP, possible that some of the investors in this one are institutional investors and not retail investors. And because if you look at the chart of SC, the number of projections for a C Limited, right? Even it looked the same when it was going up.
So there is a big difference though. See, here you are actually able to see the pattern in the price, right? I'm not telling you what my opinion is. I'm telling you how the market is reacting to it, right? For C Limited, it's not the same. It's actually they don't still have the earnings, but look at that. So that's not what you want to see. Right here until here, this is pretty good. I'm sure I even bought this breakout too. So, but once it started moving lower now, 370 to 170, that's horrible, right? So it's not just the earnings that we're talking about, but also how the market is reacting, because market can see how it's gonna, well, we have to believe that market is more intelligent than us, and it can see how it's gonna behave 6 months from now or 9 months from now. Because those guys, whoever is buying this one, they're gonna buy for another 6, 9, 1 year, 2 years, as long as it works. So that's an amazing chart, I would say.
What about UPST? I mean, I believe UPST also gave good projections, right? For in the past when it gave earnings.
Again, as I said, the price is not saying that, right? The price says it may not work. What happens is, first the market will react. Next, we will see. Let's actually remember these numbers, and let's see by the end of the year how these numbers are going to look. 195 and 234. Let's see how those numbers are going to look. There is a higher probability that these are going to go down. Both of them are going to go down. Excuse me. So, all right. Let's go back to.
So all the energy companies seems to be doing well, right? Because they are all cash flow positive.
It's well, I
And,
mean, the crude oil. Look at crude. Crude is now trading at $86.31. Crude is looking. I mean, this is in an uptrend. We don't see any
Yeah.
downtrend at all, right? I mean, just follow the price. That's it. Yeah, most of my longs are APA. That's in an uptrend. The one that I bought today, DVN uptrend. I mean, all of them are in an uptrend. I bought a little bit of DE today. Industrials, I don't know if it can go higher or not. I don't know, but this looked good today. We'll see how it's gonna. Even CAT is looking good. You know, do you see any kind of market sentiment reflected in this one? I don't see at all. I mean, look at that. 1, 2, 3, 4, 5 days up, and it basically went up, came back. I mean, this is a very big move. So we saw a little bit of pullback, but it did not break the breakout level, and now it's moving higher. Higher probability. I know we have a earnings on 128. We have another 10 days, but unless they screw up in the earnings, this is going to 245 easily. All right, let's talk. I wanted to talk about IWM. So this is where the bigger problem lies. And everybody is watching this. They are seeing that these stocks, these ETFs are doing really bad right now. So it could either, while this was moving sideways, it could either go higher or lower. Whichever way it moves, generally you would have a much bigger move, okay? But it went up how many days? 1, 2, 3, 4. It went up 4 days and started falling down. So now it started breaking lower, right? So this looks ominous. I mean, when you have volume like this, you will have a lot of support. When you have a move like this, there isn't a lot of support anywhere. If I would try and figure out where the supports are, this is probably one support. This probably is one support. And how much, we don't have a lot of volume right here. And if it breaks this one, it's coming all the way down to here because there is not a lot of support. So I have been posting IWO. This is the growth in Russell. And look at that, it's down 3.67% today. This is not a stock, it's an ETF. So if, I mean, my guess is, you know, IWM is going to follow this. Yeah, it never broke out of its, you know, is that February highs? It never did, but it started to move lower. I should have bought some puts when it broke this one. It's probably going to the 242 level.
Look at biotech, KP. They are not doing well.
Yep. Well, small cap. Well, XBI looks horrible. XBI looks horrible. I mean, this is small cap biotech, right? So it looks horrible.
Hey, KP, this is Dawal.
Yep.
Hey, quick question. Can you hear me?
Yeah, I can. Go ahead.
Hey, quick question. So things like IWM, for example, I know you bought puts today, right? But in your margin, you can, I don't know if IWM is shortable or not, but how does it, like shorting the stock, actual shorting, short selling versus holding the long puts? The long puts is on the downside.
Well, actually for ETFs, you know, shorting is not a problem at all. It's probably a good idea too, to short the ETFs. well, I have traded more options in my trading career than stocks. Okay, and for me, obviously, not everybody agrees with this, but for me, I can manage options better than stocks. So, for example, I had a 205, 195. Okay, and when I saw that it was about to turn around, what I did is, I made it into a butterfly. So I can make those changes in options. That's why I prefer options. But ETFs shorting should be the same as buying put options. In fact, shorting is probably even better if you are right. Is even better because you don't have data. You don't have
Right. I mean, time against you, right?
Yep.
So no value lost.
No
Yeah,
value.
I started doing it. The only reason is I get stuck in the meetings, right? So sometimes it's hard to execute. So I started shorting instead of puts.
Yeah. It's ETFs. Yeah, totally good. I mean, for ETFs, you don't even have to worry about it. For example, if it breaks above, if you have more tolerance, about 212, you can just get out, or even 210 maybe. You can get out.
Yeah.
You
I put a
can
stop
just,
loss around like
yeah.
3 to 5%. Yep.
Yep. That's a very good way if you can be in front of the computer. Yes.
Okay. Yeah, that's what I wanted to know. And how long you can hold the short? I mean, I have my longest holding was like several months.
No, as
There is
long
no
as
limit,
you have
right?
the money to cover it, I think you can keep it for a very long time. The only
Okay.
problem I see about shorting is shorting the stocks. Okay, especially the ones that are not big enough. Okay, for example.
Oh yeah, the squeeze ones, right?
Yeah, I mean, nobody's gonna forget what happened with shorting GameStop.
GameStop, yeah. Memes. Okay.
That guy lost 50% of his portfolio in a month. So a big hedge fund. So yeah, but again, the only reason that I wouldn't be shorting are the ones that are not big enough. I mean, if you're shorting Tesla, that's fine because for a fact that nobody else is going to buy Tesla. Same with Apple, Google, or if it's big enough that it cannot be acquired, I think it should be okay.
Right. Yep. Okay.
Today when I tried to I said this is a very good pattern to be in, but when I was trying to get
It's
out,
non-shortable.
yes, I tried to short it.
I tried it. I tried to sort this and Tesla. They're both non-sortable on Think or Swim.
I couldn't either.
Okay. I thought it was my account limit or whatever. But
no,
okay.
it's not. So generally, they do tell you here hard to borrow.
Oh, okay.
So you can always see.
I see it.
Yep.
All right. Good to know. Thanks.
Sure.
KP, can we look at teams? Team. Sorry.
Yeah, it's probably closing the gap, I guess.
Yeah, what is the gap close target? Is it 273 or something, right?
271.62.
Okay. Do you think it's okay to buy puts here then?
Well, always think in terms of risk and reward. Okay. So you will probably make, how much is that? 290, actually $20. That's not bad. That's pretty good. Yep. But the best time was to buy put when this was broken. That's what I do most of the time. When support is broken, that's where I buy the puts, or when it's tested the second time. That's another time that you can. But this is where all the alerts really work. Today I had a alert of a run at the end of the day, right? But if it was early in the day, yeah, I would have gotten into puts for this one. Same with Asana today. I was a little late, but yeah, it broke. Whenever something breaks, that's probably the best time to get into, because if you get in right here, you'll probably lose 50 cents to $1 if you're wrong. But if you're right, you can probably make 56 to 40. That's $15, the maximum I'm saying. So it's always better. And also, whenever a break like this happens, stocks move really fast because a lot of people have a alert over there. Whoever is long right here, right? They have an alert to get out if it breaks the low of this one, which is 56, 55. So the one thing to always remember about trading options is the best place to buy either calls or puts is when it breaks out or breaks down. That's when the move is really fast. We don't want the stock to move sideways after we buy puts. That's never a good idea because we could probably lose 20-30% in the sideways move. While the stock is moving sideways, the theta burn will kill the option.
So are you
KP,
predicting it could go more low as stock itself?
guys, please unmute when you are not talking to me. Thank you. No, mute when you're talking, when you're not talking to me. Anything else?
KP, I understand, right? The way how you manage your trades, it's primarily using alerts, right? Whether it's
Yep.
target or stop
Yep.
losses.
Yep.
Is there a way like where we can do trailing stop losses on options based on the underlying instruments movement?
In options, very hard because options, well, if you're doing Apple, yes. So if your bid ask price does not vary much, actually this is wrong right now, but generally the bid ask spread would be probably 1 cent or 5 cents. That's it. For them, it's okay. But any other smaller stocks, if we have those stop losses or trailing stops, it might trigger right away.
Yeah, but the way how I was thinking is rather than putting a stop loss or trail on the option price itself,
Yeah.
based on the underlier's price, right?
Oh,
Say
yeah,
the
you
underlier
can.
were to hit 100, then sell it for the mid of the bid and ask. something.
You can. I think Thinkorswim, I don't remember doing that ever, but yeah, in Thinkorswim you can do that.
Oh, based on underlier you can do.
Yep.
Okay.
Let me see if I can. By unenforced submitted. I'll check it out. If you can find it, let me know and I'll.
Okay. Yeah. I
I've
don't
used
use
it a long
Thinkorswim
time
to
ago.
trade. Yeah. I
Right.
use interactive brokers.
Okay.
Just wanted to know if there is a concept such as that.
Yeah, there is.
Okay.
So KP, if I have to do a trade tomorrow, do you think so Zim is a very good one to add, right, to the portfolio?
Again, if the market is going down, I don't know if Zim can sustain this move or not. One of the reasons I bought Zim is because I was assuming that market may not go down straight. If it's doing exactly what it's doing right now, and if we get a move higher, again, the sideways move, then stocks like Zim, Deer, Cat, they are going to move higher. So that's how the market is so choppy right now. But if we see a move lower tomorrow, everything is going to go down. I mean, Zim is not going to sustain that kind of sell-off.
KP, I'd like to take a small position in CF. Can you check the chart and advise?
CF?
Yes.
These are actually looking good. CF, and today I had an alert on Mosaic. They are both looking good right now. These are all inflation. Most of the materials, actually, look at this one, DBA. So these are all looking good because as long as inflation is higher, these are going to move higher. And also, I will have to talk to you about the XLE. In 2008, when everything was going down, only energy went up. Crazy move. Yeah, this is 2008. Before it started moving higher. So this is when the crude went to, I think 147, I think. Yep. So this could be happening now. That's one of the reasons. Or else, I have never been long on certain sector when the entire market is, going down. But when the inflation is high, crude can move higher. I mean, it went to 147 from where it's at 80s in, trying to see how long it took. Few months. So that's in February. This is in 5 months. 80 to 140. That's a big move. This is a weekly chart, by the way. So if we see any of this kind of move, all the energy stocks are gonna do amazingly well. Oh, I think I see right click on the chart.
Yeah, 2014 also it moved, right? If you can see 2014, 16, I think that's when it peaked.
14, I mean, it was sideways, but yeah, I mean, inflation was there, obviously. It was around 100, right? But this was a huge move. That was a move from 50 to 150. That's crazy move in year and a half.
It also has an inverse relationship with gold, right?
Well, it is supposed to. Not anymore. It used to be, but not anymore. Well, there's a lot of people have the same speculation that gold is not moving higher because everybody is putting their money into Bitcoin. So, yeah, but again, this is, if you look at the monthly chart, that's a nice cup and a handle. And that's, I mean, for such a long 2011 to, that's almost 10 years of cup and a handle. So any breakout above this 1923, we will see a lot of buyers coming in. But will it go over there? I don't know. Or how long it will take. I have no clue. So this is all last year. So each candle is a month.
With the rates going up, shouldn't the gold go down?
Inflation. If inflation starts to go down, yeah, again, there is no, again, those are fundamental questions which I'm not so great at, but the best thing to do is figure out what the market is doing. And market is saying right now, gold has no say in it right now. It's just moving sideways. And this could move sideways for a while before it breaks out or breaks down. When the interest rates are raised, they're expecting 4 moves higher. So that's almost 1% for the 100 basis points this year. If that happens, yeah, we will see, all these inflation sensitive stocks like, CF or they will, but again, we are assuming that they're going to do 4 rate hikes. Until that is done, yeah, these are going to move higher. Same as gold, same as CF. So, yeah, any other tickers? I don't have a lot to talk about today, but
CFLT, KP.
yeah, we were just talking about it before you came in. Yeah, this is what I was talking about the other day. When you said that, the stock might be moving higher, when you compare with this candle, this is barely a balance. Okay, that's not what I want to say. Generally, the best place to buy or get into any stock is when it moves above the day before's high. So I mean, if this moves higher and breaks this trend line, that would be a buy. Until then, now. And again, I know not everybody has access to this, but you can always ask for the.
But it has a strong support at 58, right? Multiple times it came down to 58 and then bounced back from there.
Yeah. So what happens if it keeps testing that 58? That will be broken. That's what happens. I mean,
Right.
and farther they are, higher the chance of bouncing. So this is so far away from here, there's a very high chance of bouncing. But near from here to here, you have how much? 17. That's about 20 days. Now from here to here, it's probably 10 days. So I mean, it could probably bounce again.
Right.
Again, if it comes back, the more number of times a level is tested, there is a higher chances of that breaking. It doesn't matter whether it's to the upside or to the downside. Yeah, this applied materials and that's a totally very small position, but it tried to break out of this level. I mean, tested this trend line for a while. Once, you could say 2, 3, 4, 3, 4, 5. So it tested 5 times and it went up and failed. Right. So there is a good possibility it's going to come back and test here. That's why I got that 142 puts, and that could happen tomorrow. Who knows, if we are lucky. So if it could come here and this time it could break and move lower because it tested too many times, and this time semis is giving up.
So is that bad? Like, stock testing support line multiple times?
Yeah, it is a bad thing. And the idea of testing a support means it should test support and bounce, and it shouldn't look back. For a good stock, it shouldn't look back. I think we talked about this trend line here for TTD.
And how about banks, KP? I mean, technically this year, everyone thought banks supposed to do good, right? With the rates hikes and all that stuff.
So
the year season is.
No, that depends on what they are in. So again, we are talking fundamentals, but I'm going to talk about whatever I know. So Wells Fargo seems to be Wells Fargo loan growth has been a lot. That's why it's doing really good. And Bank of America should do good too with the higher interest rates. But the institutions that have a lot of fee from mergers, like JP Morgan and like Morgan Stanley, they may not do very good, especially today with Goldman Sachs. One of the came all the way to 352. I didn't even
It was down $30 something.
Wow,
Fell a lot.
right.
No, because they are giving record bonus, right? See, KRE is doing well. These wealth management companies are not doing well. Morgan Stanley hit the 20-year high and then it dropped.
Carry is more regional banks, right? I mean, Carry is regional.
Yeah.
And I don't know how their
net interest for them it's the net interest margin. So basically
net interest margin, right? Yeah.
That's all they really require. They don't have any other businesses.
Yeah, because all these big banks, the Wall Street banks now, they are facing tough competition for the talent from the tech. So pretty much all the banks hike the pays and bonus and all that stuff. The comp expense has gone up crazy. Otherwise, they're losing talent.
All right, let's go through all the sectors for now. By the time if you guys have any questions, let me know. So XLK is this is moving lower. That's the higher low. Now you have a lower low. That's the higher high. You have a lower high. So XLK is not a trend.
Can we buy XLK put, KP? Why are we not buying XLK put?
That's because it's easier to buy puts in stocks. That's it. No, there's no other reason. You could probably buy it, yeah.
Okay.
So does XLK have the growth stocks as well in that KP, or it's a
Well,
tech, right?
Yeah.
well, I mean, all the technology stocks from S&P are in XLK. So I don't
Okay.
have the list, but yeah, if they are in the Tesla would be next. I'm not sure actually. Let me check.
No, Tesla is a XLY consumer discretionary.
No, it's not. Yeah, it's not. Yes,
Okay.
you can check it out on. Yeah.
Because since growth stocks are like hammered hard, so probably XLK if it has the growth stocks in it.
Well, the problem with that is Apple and Microsoft is 40% of XLK.
Okay.
40%.
They're pulling it up.
Yeah.
They're holding.
Yep. If they go down, yes.
Yeah.
It's gonna go down.
KP, did you buy Microsoft? I saw some message.
No, I
I
didn't.
think that was Ravi, I think.
Yeah, I didn't.
He bought
Yeah,
Microsoft.
I did not.
Yeah. I think he bought and he sold some at 319 or something.
Yeah. So let's go to healthcare. Yeah, breaking the uptrend. XLY, same. Well, I don't think we'll see any positive. This is even worse.
Yeah, except I think nothing did great today.
Actually, this is still an uptrend. Financials are still in
Financials.
an uptrend. Industrials, yeah, they are also in an uptrend. We should. Oh, that's a. If XLP and also XLU starts giving up, then there is not a lot for to hold S&P together. Those will go down. Those were the leaders for a while.
What is XLP? KP? XLU is the utilities. What about the XLP? Consumer products?
Staples, yeah.
Staples.
Like Coca-Cola.
Got it. Okay.
Coke had a high. See, I mean, they are looking really good. Church and White. Look at that. That looks like a growth stock. 85 to 105. That looks like a growth stock. XLB. Materials are still looking okay. That's because of the same reason why CF is up. Inflation.
Maybe how long it took for the utilities and staples to get this growth? After how many years?
Well, they gradually move higher. When the economy is good, they move higher. When the economy is getting bad, in the first few stages, the staples will do good. But if the entire market goes down, they will go down with it. It's a lot of investors would go hide in there, because okay, some funds they cannot have cash. They have to invest somewhere. For them, staying in Coca-Cola is probably a good idea because you get the dividend and whatnot. I guess that's it. Let's look at. We got the NHP numbers today, right? That's the housing numbers. I can't remember how the numbers were, but I mean, compare how the stock is doing when the year started. This one is down too.
I thought housing stocks were doing good.
Yeah, they're not. SMH. This is still in an uptrend kind of. It has to break the 288 level.
But KP, on this SMH, right? Semiconductors were supposed to be the top performing industry group, right? And when the downtrend begins, the industry group starts melting down. That signals the intense downward pressure, right?
Yep, that's right.
So can we interpret it in a way, if SMH were to break down significantly, then the momentum to the downward side accelerates?
Oh, it will, because many of the semis are still near the highs. A lot of
but
them.
If you see IBD rating, right, it's no longer number one anymore. right? It moved to 8th position or 5th position already.
Actually, see, SMEs have IBD does a lot of industries. Let's go there. They do it by the industry and not the sector, right? So
Look, right, oil and gas moved to the top position.
yeah, they are in the top, no doubt about that.
But even last week, semiconductor was number 1, I believe, or maybe last week.
Yeah, I think Fabless. Let's look at this one. Not manufacturing.
And also today, I see IBD reported market is in downtrend. Or sorry, correction.
Correction? Okay.
Yeah.
Wonderful. Well, I used to depend on that a lot. I don't anymore.
All the stars aligned.
That's a confirmation, but
Yep.
I don't depend on them anymore.
Looks like all the stars aligned now.
Yep. I think it's a little too late for people who are following them. Yeah, for them it's a little too late. So yeah, there's nothing until number 10. Industry. So it's number 4.
So yeah,
Number 4 is semiconductor fabless. So other ones are all telecom. Oh yeah, I mean the Cisco, Sienna, they are still doing good. What else? NetApp, but I don't
actually,
know. NetApp is
yeah. Look at AT&T. It went up by 20% since December low.
yeah. I don't.
I think it went down a lot as well.
I rarely look at that.
No. Like December, like it was $20. Now it's like $27.
Yeah, it went down a lot, Arvind. I mean, I remember I used to trade 30s, and then it went to 20s.
Yeah.
Not a trade for
what
us.
I'm saying is, like value stocks are taking over. Like Coca-Cola hit the new high, right? Yeah.
Even in the tech also, I think Cisco and Dell were doing good. I had some positions earlier, sold them. The old tech, like Cisco and Dell.
Yep, they are doing
Dell,
good.
I think KP suggested the option trade, right?
I still have it.
Profitable.
I still have it. I still own
Okay.
it. Yeah. I mean, it's not budging, and if there is any bounce in the indices, this is gonna take off too. So
yes, same thing with HP. If you look at HP again, that also hit a 20-year high.
Yep.
Yeah, all HP, Oracle, Dell, Cisco, all the old favorites except IBM.
All right. Any other questions, guys?
Hey, KP, can you check Lucid Motors and Coca-Cola charts?
Well, no man's land right now. It has to break that 47 or 35. It's a very volatile stock. So yeah, but so far it looks okay. Unless the market turns down, this one still looks okay.
Okay. Yeah, planning to add for really long term.
Yeah, I don't. I can't. I'm not going to answer.
No, I know.
Not going to answer for long term.
No. I'm not even asking that question. I know it's not a question.
No,
How
the
about
thing is,
Coca-Cola?
we should probably see. There are few EV companies that are going to do really well, and based on how the market is reacting, after Tesla, Lucid seems to be doing really, really well. I mean, pure EV companies, and look at Rivian. That's another big company, right? And it's making new lows. So maybe Rivian is not in play according to the market right now. So I think Lucid is probably one stock that will do much better.
Right. Okay, and can you check KO? KO is making new highs. When chart looks.
Yep. Well, again, many of the staples are this way. I was looking at Hershey. Look at that. They are all making new highs. Many of the staples are making, because I would assume that's because they have the power to increase the prices when the raw materials go up. I mean, they don't have a lot of competition. Hershey's, it's one of the biggest, and in its own industry. So
Okay, what about Costco? Can we look at Costco? I think it has a good pullback.
yeah,
Obviously, it's going to go down more.
yeah, it did. Again, yep. Not just this. I think big box companies look at Target. I mean, Costco actually did very well, obviously, when compared to Target. But yeah. I mean, as soon as the year started, a lot of stuff. I think I shared this with you guys. How the market is looking right now. Oh, where is it? Yeah, look at that chart. That's just 11 days. QQQ is down. These are big percentages. 7% for an index. That's big.
In 10 days.
Yeah, it's crazy. So, but there is also an adage saying that, however, the January, I mean, whatever way market moves in January, that's how the entire year is going to be. That's what people expect it to be. So, hopefully not. But if we have a bigger correction soon, I think we should have a nice bounce in the.
And also normally, like, you know, people say like October to April timeframe is the best 6 months to trade versus the other 6, right?
Yep.
But seems like this time is different. At least so far, like, you know, November, December, January, all 3 months were.
So there is a statistic right now saying that last 3 years have been the best 3 years since 90s. So think about that. And people have made a lot of money in the last 3 years. So hopefully. So if that's the case, we should have a correction. And we haven't had a recession since 2008.
Yep.
2007. That's a long time to not have a recession. I'm not longing for a recession, but something that we should keep in the back of our minds.
TP, can you look at PSX?
Yep, I saw this too over the weekend.
So should I exit now? I have a small stock.
Well, for these, right? I mean, this is something that I follow. Unless I see a 3-day low, that means for tomorrow, unless it breaks this low, I won't get out. Just have a 3-day low.
Okay.
The thing is, another way to look at it is when it peaks, generally, I don't know about the oil stocks, but when it peaks, we'll see a huge candle. When you see that huge candle, that's when to get out. That's where all the FOMO is right at that time. So
you think there will be FOMO actually? Because see, I added a lot of value stocks in
there will be always
October to December.
As long as humans are trading, there will always be FOMO, there will always be greed, there will always be panic. And that's why one of the reasons we get bigger candles at the end of at the before the market bottoms, we have bigger candles. Before the stock tops, we'll have a bigger candles. So that's when we should get out and not be in it.
Yeah, right now, see, my strategy has been always if 52-week high is 94, I put 93 and sell order because I'm not in front of computer. I'm happy if I get 90 plus.
Yeah.
Is that a right strategy or because it's hard for me to, I mean, for a few shares, I can't really watch all day, right? So.
Well, I have no idea. Well, I mean, I never did that. So I've always been in front of the markets. And the easiest thing is to have an alert. Alerts are probably the easiest things to do. Have an alert and, you'll have an alert in your phone. So.
Okay. Can you look at Cigna, please?
Which one?
Cigna, CI.
Oh, I barely trade these. Let me get rid of that.
No, I mean, these are like kind of investment. As I said, I bought a lot of value stocks in October to December.
It looks okay right now.
Yeah, I mean, I'm positive.
Yeah, of course, market doesn't care whether you're positive or not. Right. And
You
also
see a big resistance at
you shouldn't even care if you're positive or not. And it's not working, you should get out. Yeah, I mean, it will probably, if it breaks out that 242 level, it's probably going to, we might see a little bit of resistance here.
okay.
57. Yeah. Let me pause the recording. Any more questions?